Hello, 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 everyone. Mike Arnold here, co-founder, Path Trading Partners, along with Bob Iacchino. What a volatile day! Hey, look who's here! I'm here, testing my own live stream. Welcome, welcome, Michael. Hope you had a great day, trading day, Michael. Hey, Patrick. It did tease that key area. We got key lines in the sand now. This was actually from a standpoint of breakdown levels. This solidified some levels now going into next week with the election, with inflation numbers. We had Fed speaky out in force today. Oh my goodness, my head hurts. So Carvana and DraftKings wrecked today. The gold miners exploded, at least 7, 10 to 20% gainers. You're welcome for the tip yesterday, Rich. What's up, Magic Michael? Thank you for being here, P-Dubs. What, Patrick, too? Ready for Melt Up Monday? We could have a Melt Up Monday into what's going to be next week's Tuesday name? Who wants to name next week's Tuesday episode? Because we got the elections. So who's creative in here? I'm just good at these silly little levels. These silly little levels. What? By the way, it was hard. It was hard today to pick a loser overall in the macro, not in the micro trading. Boy, you could get whipsawed all day long. Tuesdays was Waka's watch. Well, midterm Tuesday, Ted, come on. We got to get a little more creative. I could have come up with midterm Tuesday, and I'm about as creative as what's not creative. So, yeah, Tuesday was Waka's watch. Why? Are we going to tanking Tuesday? Midterm tanking Tuesday? Midterm trashed Tuesday? What are we well, since this is Friday, it's late Friday. Since Waka changed time before, USA changes time this weekend if you're in a state that changes time, which is most of them. And I thought we were getting rid of these time changes. I'm tired of these. Can we just get rid of them? Stick with one time. I don't want to change clocks. So, hey ho, we got a higher low. Oh, are we going to rhyme everything? So Waka's probably not going to be on. It's late his time. You know, we'll have to ask him. Maybe he can join us on Sunday, but it'll be late Sunday his time too. Again, if you were trying to pick a loser today, ooh, Tesla, we got some CRM, some Intuit. Apple slightly down. You got to bounce back in Google, in the old Amazon. So, I mean, most things, you got the groups, most major rush in the basic materials. Okay, technology was Healthcare lagging today, but everything was pretty much up for the week, though. Look at technology and comm services for the week. Ugh. Still not good. Basic materials and energy for the week. Fed Watch tool. We had speaks all over the place. By the way, if you're new here, that's what I annoyingly refer to as the Fed speaks. The Fed speeches. It's the Fed speaks. Because it annoys the crap out of me. And they were, who do we have today? We had Collins. We had Barkin. We had Cash and Carry. We had Evans. We had Brainerd. Oh, and according to Evans, it is possible to be thinking about pausing even if it's a year away. Can somebody tell me what the use of that statement even is? Huh? I don't know. But they were stressing that lower rate hikes is really was gearing. They were really pressing, from my opinion, towards that 50 basis point, even though it's not decided yet. We get more data. We are data dependent. we're going with that 50 basis point. Who said, was it, I forget which one. I forgot which one now said, well, it could be 25, it could be 50, it could be 75, and it could be a this, and it can be a that. So, Fed watch tool honing in on the 50. The 25 is not even on the radar screen. Fear and greed index in the greed mode still. All right. Hey, Options 22. Hope you had a good trading day. China stocks exploded. Hey, Connor. How are you? Hey, Sashi. Netflix poised to fill the gap right now. Big talk, little stick. All right. This is, as I said, this is fantastic with today with the, I mean, not from an intraday volatility standpoint. I mean, these swings, let me just take off the not a double levels from this morning, but here's that 50% harmonic from the run up, which has been, you know, on the chart a couple days. And you remember my key area to watch for reversal patterns is between the 50 and the 62.5. And so going into early next week, we have a key line in the sand, the 50% harmonic. Remember, it's an area we dipped down below it yesterday on the 3rd. Pretty much overnight, retested it. Then 1, 2, 3, multiple tests here. I mean, down on the 15-minute. A boom, a boom, a boom, a boom. 4 tests of the area right there. What does that give me? That gives me a very key area to go in next week, this 37.15. So we have that solidified to the downside. That breaks. I do have the harmonics on here. We'll go review this on Sunday. But I really like this. I just love these levels. Why do I love this level? So the harmonics, they're not reverse harmonics. They're forward harmonics, but they're from this high to this low. 36.76, and look, key close and open right there lining up with that. So that's a fantastic level that I will be utilizing next week, and this is where reinforcing a low, so I will be using that low after the 62.5. So we break through to 62.5, especially intraday. I got another target, 36.48. And then we close below 36.61. I have my future targets too, to the upside. To the upside, and then we'll talk some more. We will chat amongst ourselves. A pretty decent breakout level. It has to be verified, but it's 37.85. Prior support area, sliced through, nearly got off there before the rollover, but you see, spike above, close, spike above, close right at, and I'd recommend using for your major levels, using hour time frames and up for your major levels. You can fine tune it on the shorter time frames, but this is, you can really see the patterns here. Spike, close at that spike, and then rejected. Coming up here, confirmed with this end of day high. We still got 15 minutes, but I doubt we're going to take that out with this little reversal bar. So that's a little lesson on how the first step to utilize levels, and then you can come down and fine tune it. Meaning if we break above 37.85 for those shorter term players, the next area I needed to tackle is this 37.97 to 3800. You get the ongoing close above there. It's in breakout mode from my perspective into the clear path move, with the next key major target being 38.43. Very whippy day, though. If you we're looking for the people who are trying to learn the tick. Let me just recap a little here. So you had on the open, bullish mode, shifting to bearish. Bam, bam, bam. There's some sell programs coming in here. European close starting to ease up. And then the shift back in the afternoon to buy programs. Remember, a lot of these ticks below 1,000 or above, below negative 1,000 or above positive 1,000 are buy programs. They're kicking off massive sweeps of buys. All right, so you see the bunch of it. This is where you can use it to. So this was a very volatile range-bound day, ending up with an upwards bias, starting off with that upwards bias, going to the negative bias, then reshifting to the upwards bias. And still ending up with the S&P up 127 basis points, 141 of the NASDAQ, 122 of the Dow, and the 113 of the Russell. You are welcome, Options 22. Thank you for being a regular on this channel. Playing Spider every time NYSE tipped gap up on 1 minute made me feel like I'm gaining wizard powers. Don't let it go to your head, Connor. I hope you've learned something from this channel. All right, Coco. Tick is useless. Again, you're coming in with ignorant statements. Does anybody else who's here live think the tick is useless? Please tell me. I really, if Coco's got a valid point, I've used this for years. Even before it got more popular in charting platforms, I've used the tick. Anybody really, if you spend the time to watch it and learn stuff, does anybody learning to spot the biases, learning to spot the shift in the patterns, think this can't help? If you're a short, now, if you're not a day trader, no, there's, it can just be confirming at the end, like, hey, this shows me the end of Friday, there was a lot of buy programs and a lot of upwards bias, which you can confirm with this, duh. But you can see how much that this was not just a rogue move. It was supported by constant buying. That there was broad-based buying on the NYSE. And if you look at the tick Q, you can see it here. It wasn't as strong, but with the spikes above 800, you can see the shift. The morning shift, the bias shift in here during the downward moves, and then the shift here at the end of the day. Maybe you're just not seeing it, Coco. I don't know what to say. We're not going to use your tick, Coco. I don't want to know what your tick is even. Don't want to know. I don't think anybody, and we're scaring away people. We're scaring away potential subscribers because they don't want to use your tick either, Coco. Please consider subscribing, ringing that bell, and hitting the like the mic button. Or just hit the like the channel button. It's not like the mic. Why did I start saying like the mic? Yeah, there we go. Don't forget to smash that like button. Thank you, P-Dubs. Connor thinks tick is a game changer. Tick is definitely not useless. Well, all right. So how to use it in trading? You got to pay attention, Coco. You got to have a attention span a little longer. Good point regarding trading versus investing. Tick is not useless to me as a day swing trader. I don't even think if you're a swing trader, I like to watch for confirmation. If I see here's the end of day, if you want to know, let me just get through a couple things, then I'll get back to this. Mike, when the market always goes up, you don't need any TA, just a waste of time. Just buy and watch the ATM kick cash. Coco has the life. Oh boy, when the market always goes up. Yeah, we've had that recently, haven't we? The market always goes up. You just buy and go away. Wouldn't that be the return to the markets? So how I use this, if you're not even a day trader, is this useful? Yes. Because if you see strong rallies and you go to the tick and you're not seeing a ton of broad-based buying, Meaning if I'm not seeing a ton of moves up to these very extreme tick levels, it was not broad-based buying. And there are days like that where you see the futures especially just go on a scream, but it's due to a handful of large cap stocks really moving stuff, but you didn't have the broad-based support. And there's other ways to see that too. Okay, you can look at things like advancers, decliners. If your advancers aren't really strong because the advancers were done by just a few handful of stocks, that's another warning sign. I can spot things in the tick by looking. So the end of day rally was, or mid to end of day rally was supported by a fair amount of buying pressure and very little selling pressure. You see the last spike down was basically 1 p.m. Central Time in the last 2 hours until the cash close. You didn't have any major selling. You had little spikes of selling, but nothing down here. So was this a pretty broad-based supported rally? Yes. And you can also see that if you go into, and this is pretty obvious, once you see this much green across the table and you look at your sectors for today, you see it was pretty broad-based. But the tick is showing you a lot of confirmation. So for a swing trader, if your time frame's weekly to monthly, no, you don't have to glance at it because one day or a couple days isn't going to shake you out of positions. If you're in swings or tried to be more tactical, then this information is helpful, I think. Remember, Sashi, every day 70 to 80% of days actually are more chop. Why is the market undecided? We had back and forth with, some was dovish Fed speak today, some was hawkish. You have other stuff going on. You have some people taking profits going into the weekend from shorts from the week. If we look at the last couple days, we're going into a key event next Tuesday. We've had until today, Monday, Tuesday, Wednesday, Thursday, down days. People were unwinding positions. People were squaring up positions. You also had key support. We have on the weekly, here's the NASDAQ, by the way, still potential double set up. Hey, we get election results. Maybe we get another pretty strong rally that triggers. Is this to new all-time highs? No. This could potentially snap it back to some mid-September highs. Maybe, not even confirmed. But if you look at the weekly, this is a very key level. I review it on the podcast with Jim Iurios coming out. Why this was a very key level I was watching. So the weekly closed above this. This was major. The lowest close was back on the week of October 10th. We did not close below it. If we had closed down here, so you had a lot of buying pressure as witnessed today with spike down, reversal, spike down, reversal, spike down, reversal. After this 7:30 payrolls spike down, so we have a great area. This 10,685 to 10,700 is a great support zone. If that starts breaking, watch out. Watch out. Because now we have a short-term confirmed support zone and a long-term confirmed support zone. Fantastic in my book. Absolutely fantastic. Because this clarifies. So you see here, you see the lines going together on the daily, but you come down on that short-term basis, everybody who was a buyer down here that wasn't squaring up a position, that was trying to establish a long position at these lows, for whatever reason, Going into next week, whether it be a squaring up or just a bounce, this breaks. Hey, let's say I squared up positions down here and we're flat. Let's say short, we're flat. All right, what do you think I'm watching for? We start breaking down next week below these levels intraday, short. We close below that level, stay short. Also, this gave me a pausing area, and look at this cluster down here. 10,505 to about 10,450. Key support zone. Not only is it the lows from Thursday, October 13th, we have multiple harmonics down here. So this was a fantastic day for technical analysis. By the way, I already went through that on the S&P. Dow could not close back above the 200, so that's the key, the upside thing I'm watching. Also, I've done the projection to yesterday's lows. So my level with the rising rotation zone is right around this 31,570. Why there? Because this level's, the rotation zone is going to rise into it, with that being the harmonic. Intraday, if we break down, 31,400, 31,396, 31,400 on a closing basis right here. So I got my downside levels. We break this rotation zone into a clear path move. I'm then targeting the 50 and this minor breakout zone, and then the 30,700 to the upside. It's really nice because this 200, and this is intraday. You learn to use levels. You'll become a much better trader if you use higher time frame levels and then translate them down into the lower time frame if you're an intraday trader. For example, I have a 62.5, 32,593, and 32,550 area roughly with that. So if I was going to translate that down, I can then use these areas to watch for breakout plays going into Monday. For, what is it? What's Monday now? P-dubs, it's Melt Up Monday. I have levels if we have Melt Up Monday. Where are we sitting? Well, Coco could be right every once in a while. There's nothing 100%. Well, what was that name? Who got banned? Well, no, see, he every day was bullish, but there were occasionally bullish days. But the problem with that indicator was it was never not bullish. So that's like going in with an indicator that always says buy. That's sort of a useless indicator because, yes, there are days you should buy, but if every day you should buy, it's useless. It's just fun. That's why genomic. Hey, Nas Industry. Who is Coco? Coco's the new sort of, I think he just likes the attention from his asinine comments. But I can use his asinine comments to teach something. That's why I sort of pick on it too. He's the whipping boy of the channel. Hey, Grod, how's it going? He thinks he's asking good questions. Hey, it's great for teaching. Coco, you are a great teaching tool. Thank you. Here we go. Patrick Evans is possibly thinking about pausing even if it's a year away. If inflation reports are not favorable and Fed still wants to hike expeditiously, can do 50 basis points repeatedly. That was the second part of that. I don't know why we're even... You can always think about anything. I can think about Christmas that's 2 months away. I could think about July 4th next year or my birthday. And what's the point? Hey, Reese, thank you for being here. Wow, I like that, the little, what do you call these? The picture next to names. Would that be an avatar? Thank you. Getting more new people all the time. Thank you. For what platform I'm using? I am using TradingView for everything I do on live streams and recorded streams. I use TradingView. I actually find it really handy because it's an excellent, excellent charting platform. If there's a link in the description below, if you want to try it out for a trial, I'd prefer if you use my link. It just gets me some trading viewpoints. But I mean, I'm not pushing anybody to use a platform. Why do I like it? Because if I run out to, let's say I go to Panera to get my iced tea, I can have my alerts set on my phone. I can do a bunch of stuff, even if I don't need to even keep my my execution platform open unless I want to actually execute things. I don't like to wander around, getting some lunch with trying to execute stuff if I don't need to. So I can always keep TradingView open. Exact thing I set up on my desktop, I can use on my iPad, my iPhone, or whatever the mobile phone is. So it just translates really easily. That's why I use it. And I like the tools because you can customize a lot of stuff, and there's scripting language. So if you know how to script, or you can modify indicators and script them out yourself. Very handy there. Double bottom on 4-hour chart, NASDAQ and ES. NASDAQ and ES, is this a double bottom? For the 4-hour, this is, see, this is one of those, no, this is way too, this has too many hits down there. Even with this, we got one, you got the middle hump, then you got essentially way too much volatility as confirmed by the 1-hour with an offset, way off centered. Would not be playing this as a double at all. It's when I've seen these patterns before, and I've looked at thousands of them, these are unreliable. What would be better is to just use a key breakout play level into the clear path move. That's when, yes, you can play a bottoming pattern here. However, would not use the targets. Would just use clear path targets. And you see the clear path targets. Look, just going off the 4-hour, what I've taught before. The 4-hour, you have a single candle clear path. By the way, single candle clear paths, you target the breakdown, single candle clear path breakdown zone. And then if I drop to the 1-hour, look at that. Same breakdown zone. So on a break above 37.85, that's confirmed next, if we have melt up Monday, I have my key major target. My first major target. And then for micro traders, you can always go down and fine tune it like here. I'm not advising this unless you're a micro trader. Why? Because you can get too nitpicky. But if I needed an intermediate level, that's where I can drop to the 15-minute. Remember, your time frame should have separations of 4. Separations of 3 to 4, roughly. So that's why I like the 5-minute, the 15-minute, which is a separation of 3. It's better to use 15 than 20 because more people follow the 15. 15 is a separation of 4 to the 60. 60 to 240 is a separation of 4. And then there's not much benefit from going to any other chart other than the daily. So that's where it jumps. But using intraday, so if you're going to use like the 10-minute, if you wanted to, some people like it, then I'd be using the 10-minute, the 30-minute. The 30-minute would go to the 2-hour. If you're going to do that, you can go to the 8-hour. I tend to like the ones I utilize. Yes, the futures are now closed. Futures are closed. 4 p.m. Central. Hey, Anissa, welcome, welcome, welcome. So, futures are now closed. We can confirm levels, but nothing's really changed. Nothing's really changed. Well, this was a mess in the notes today. Finally, the trigger above for this sloppy double, but it's still valid. I'm taking this other one off at this point. This was a little reversal pattern, so that's what I'm utilizing going into next week for the levels 110.14, 110.20 and a half. And those are my two majors, as I said. 110.26 cutting into the wicks. This is technically the move it's reversing, but this is cutting into the wicks on the 1 hour time frame. It was not triggered on the 4 hour. So I'd like some substantial confirmation on that going into Monday or Sunday night. But that was a messy day in the notes. Dollar index taking it on the chin. Massive reversal in the dollar index. Funny, remember yesterday I talked about 112.62, was watching for that close above that. That would have taken off this pattern. And yesterday, no close, 112.58. Did not close above there. So not only did it not favor the continued retest of the high area, it did not end this pattern. And look at this bar. So this freaking pattern is still in play, and we're still in major consolidation going into next week. Yuck. And you see weekly still in the weekly rotation zone. What's interesting is if it does not cancel out this pattern and ends up going for a little longer and this rotation zone comes up here, the probability is actually increased then for the pullback in the dollar move. Yes, I literally, insanely enough, start with a 10-year chart and work my way down. I will look at the monthly. I'll go monthly, weekly. Sometimes I'll go quarterly for super long times. But it's generally to keep a bigger perspective, I'll look at the month about once a month. Weekly, I'll look at after key trading days, especially big days, just to make sure I'm not overlooking something on the weekly. Then it's every day is daily and dial down. I suspect a follow through Monday with a turnaround Tuesday, Wednesday after the election. Yeah, it could very well happen. It's going to be interesting, and the election doesn't have to be resolved Tuesday night, Wednesday morning. That's the other key thing. So we could see, and then we got CPI next Thursday, which is going to cause volatility. Hey, Connor, everybody shout out to Connor, super sticker. Thank you, Connor, for the super sticker. Again, thanks, P-Dubs. Connor coming through strong. Supporting the channel. Weekly RSI for dollar index starting to go down. That is a good observation. Starting to get out of, again, the overbought conditions. Going to be interesting to see where it ends up once we get back to oversold, especially now. Daily cycles rolling over also, so it'll be interesting to see if this holds. This did trigger. I was watching to see the weekly did not, as I said before, but the pattern is still in play. The next time it breaks could be very interesting from a short perspective. Could somebody block that stuff? What you thinking about the 2-year? Hey, Happy Jack Travels. Thank you for being here, Happy Jack. I normally just follow the yield on that, but I can definitely map this out. You see how often I play 2-year futures? Not very often. But just getting the macro picture in. Gotta start with the macro. See where my big stuff is. Weekly perspective. Turning up. Daily perspective. Trying to get in a bottom. That's interesting. Aggressive buy signal on a close above today's high. Problem is, you could get a little room to run back into the daily rotation zone. Only challenge is you're slamming right into the prior. Yeah, if that I'd actually need the technical trigger would be above today's high on that 101.28.3. But you if you get above 101.29 and a half, it could be an interesting bounce play. Easily an interesting bounce play. Again, could somebody take a shot at reporting that crap going on? So I'd be watching for an interesting bounce play to 102.01. If I'll have to keep an eye on that because there could be some. It's going to be tight on a reward versus risk level, although you got a decent stop level of about 101.25. Might be able to be raised up if another base is formed before it snaps that to the upside. To the downside, it's again that 101.25. So if it does not trigger that, 101.25 is a rollover play for to the downside. What else did I miss? Again, thank you for being here, Happy Jack. Longer term, there's no, from a longer term perspective, there's no, this is not a double bottom. We don't have a strong longer term reversal play. You do have an upside bias on the weekly, and now looks like we're getting the upside bias on the daily, so could easily see that return with that gap fill back to the rotation zone. And then if that was utilized as a stop raise, because this is a clear path move, a little sloppy, but it is clear path. You could then, I'd be looking for to run up closer to and fine tune a level between 102.03 and 102.08. Diminishing returns on Fed speak. Last couple times we were way low 2 days out of from J Powell. Now we're making a higher low. Good observation, George. Hey, P-Dubs, thanks for being here. Hopefully see you Sunday night. I will be here Sunday afternoon. Thanks, Happy Jack. Dream come true. NASDAQ double bottom on 4 hour. No, I already covered that. No. It's a mess in here because of this. If this is just too messy, I've already covered that earlier. It would just be a breakout play. And the major breakout play is above 10,971. Crude, then I'll get to a couple other fun stocks today. Crude, essentially, even with the aggressive, this is over. Going into a Friday. That's over now for anybody crude, and you can translate this if you want to play something ETF related to crude. I'm watching. The cycles are headed back up into here, but I am watching this breakout zone, especially above 94. Stop production 95.81. Target a return to the 200 and the harmonic 97.99. So just in front of 98. That's the breakout play I'm looking at. As long, and that needs to, if it's played intraday, it needs to sustain a close above 94. No close above 94, no hold from my perspective. Any pullback now, the key support's at 89, just in front of 89, 89.10, 89.20 is the key support. But this could get interesting for a short-term breakout play. And no, that does not invalidate the longer-term down play, which we also talked about with the Jim Iorio podcast. Watch for that to drop. Other things. Who has been going? Carvana is going to be the first major casualty. The first major casualty. Oh boy. unless they pull something out of their rear with a debt financing, completed the return, the full vertical up, vertical down, car vending machine going bye-byes. They're going to need restructured financing if they can even survive it. But this is gone, vertical up, vertical down. Goodbye. Goodbye. Oh, hey, I was just going to... Oh, I see that now. Hey, Connor, bring up the monthly on Sunday if you can join us. Yeah, I was going to get to this one next. Which I don't know what they were thinking with... Did anybody see that layoff letter? And if people were wondering, was there warning signs for Twilio? You know how I feel. You know how I feel when something doesn't have a PDE ratio in this kind of environment. Yes, and this did qualify as a massive double top. This did qualify on the monthly basis. Then you got the close below the 62.5. Favors the return to the 87.5. And look at that, then confirmed with resistance. Goodbye. Goodbye. I'm just wondering if we're going to see the all-time low support in this. But yes, this stock gave plenty of warning signs to get out. Oh, this was also this. Oh, this is fantastic. Is it this? Yeah. What's this? What is this? Everybody wonders. I've never seen an island top. Here you go. There's your textbook example of an island top. Pretty much. Yeah, you have a little overlap here in wicks, but this textbook example of capitulation top, never revisited. People wonder, do all gaps always fill? No, not if this goes out of business or doesn't survive their massive layoffs. There you go. The island top, the dreaded island top. Now, was this a precursor to going to where it is now? No. Okay, let's put that in perspective. I just think it's funny. Not from a company having to lay off people, but from a technical charting pattern that this was the top of this whole move. So there's, take your screenshot of that one on your platform if you ever, somebody ever says, well, what's an island top? Hey, I got a chart for you. Vertical up, vertical up, vertical down. And here was the top. Where was it? I just got to look one more time. Indulge me. They're right there. So, yeah, Nas got it right. Island top. Oh, we got so many smart people here. So many smart people. What else? Then I'll just look at a couple of stocks and we'll remember I'm live again on Sunday at 3 p.m. Central. If you want to join me then, CLF. Just seeing, this is, oh, that's not good from a charting perspective. From Cleveland Cliffs is going off the cliff. Would I be aggressively buying this? No. I mean, I'd have to dive into this more because the PE ratio is super low, but I'd have to dive into this more to really look at their fundamentals. When are their earnings coming up? Did it already hit? Back on the 25th? Oh. This is a sell, period. I mean, it's a short actually below the 200. Even on bounce back plays, the 62.5 you can pretty much see is major resistance, and the declining weekly rotation zone. Anything bounce back plays would be sells. Is this a double? No, it's not. Next target would be 1048, but I wouldn't be touching this. I wouldn't buy this with Coco's money. So that would be my next target to see. I'd have to really dive into it from a fundamental perspective, but I wouldn't touch this from the long side at all. At all. Roblox. It's a mess. Ugh. Hey, couldn't quite do the full gap fill. This is a mess in consolidation. Closed on the daily above the 62.5. Did not get the weekly confirmation. By the way, you still have this other weekly gap here. Oh boy. And that gap fill remembers down to this close. If it does not find support at 39.15, I would not want to be short-term long this. 39.15 would still be the line in the sand for me. So if this doesn't get a bounce on pretty quick, it's not. This would be one that this you had the probability shift, and then it could not sustain it and not confirming with the weekly close. Because while you break down below here, this is a pretty decent support level, and your gap fills down to this 35.45. Would not want to touch it from a long position if we close below 39.15. Would not want to touch it at that. So that line that was up here from the other day still holds true. The bad thing also is now closing below all, especially the 50, but closing into the gap. That's already a warning sign. So on intraday weakness, if it really breaks below 39.15, it could be an early bail. On a close below it, a definite bail from my perspective. If the only thing that would be on Monday, if it really needs to regain the 200. There's a lot better stuff to trade than this. This is a mess right now, especially since the probabilities, it hit it there and then petered out. So you're short. That's good. Looking for 20? Well, I mean, I'd still reuse this right around 22.50, 22.87 for my target personally for shorts. And then you break down below there. If you wanted to try to roll something longer when we eventually get the major market meltdown, those are the intermediates using the reverse harmonics. Now, from the short perspective, wrong thing. So we covered it from the long side. You still have your key level you're looking for to reinforce the short pattern. Look at this. Bam, bam, bam on that 62.5. That would be my major key close. 33.74. Close below that. Target the return to the low areas and then kaput. How's Natty Gas looking to me? Where's my natty? Why am I on that one? There it is. Like, that doesn't look like a natty gas chart. It's sitting, if you, on a short-term trade, it's still a break of this 643 area with a confirmation close above that to return to the 672 to about 680 level. You got a lot of overhead resistance right here. That's the only short-term bullish play that there is. And that can be done with a pretty tight stop. Fully filled the gap finally today. That's the only bullish play. From a bearish breakdown, there's nothing just yet. It would have to break below about 575 before it's looking like any short thing. Let me just double check something. This is not. So you had, there's no doubles, there's no key reversal. And on the shorter term basis, this is where if you're trying to play natty gas the upside, you can keep a real decent stop in here. 632 below this. Not right at that level, but below it. On a closing basis, on a more of a walkaway basis would be about 620, but a closing basis would be there to play for this, the key gravitar magnet right in here. 50, 200, and harmonic. Harmonic extension and harmonic retracement. All the steel companies popped today like X and Vale, but with Brazil new president, which not buying Vale. You got a lot of basic material stuff popping today. How is that still on there? I mean, these still aren't long-term plays for me yet. Gets interesting. X gets interesting above this 22 area again for a return to the 200. But until then, there's too much resistance up here unless it was a micro play. But above 22 with that area. Yeah, it's interesting on a breakout higher, and people would say, well, why don't you just buy it now? Well, I don't know it's going to get above this level. The only play before that would be an aggressive play above 21, and then if it closes, I could target 21.95. Closes above there, I could target, but I'd rather wait for some confirmation breakout at this point. Especially with like this gap today. But overall, I'd put a level on your chart there at that 21.95, 22 level. You start breaking above it intraday and get that daily close above it. You have a gap left behind up here, and you have the magnet of the 200 as a target zone. Hey, Dr. Michael. Yeah, basic materials was very strong, which ties into the steel stocks, as I talked about. Netflix, and then I'm going to call it a day. Netflix did not fully close the gap. Netflix has not fully closed the gap. Can see here the gap fill also is not the breakout area. This is not a good close. I'd be watching for a bounce here going into next week, but for any remaining long positions, I'd be looking to more aggressively unwind them now. Remember, this is the breakout zone at the 50. The gap is technically down to 240.86. This is not a good close, especially with a stronger market. You had the NASDAQ up 134 basis points and Netflix down 3%. Not strong. Closing, as I talked about with Roblox, this closed into the gap also. So on any bounce play, even if it comes back down here, test the 50, the bounce play would just be the secondary reaction. Then I'd be looking at more for a rollover play at this point. Cycles are at the bottom. That's the only thing you have going for you. But weekly cycles are at the top. So you could see a bounce and then the big rollover play eventually. Would not be looking to initiate anything at this point against key support. Would be only short term with based off this close, because now these levels on the overhead become major resistance. So we will probably get a bounce, but would use it not to establish new positions, would be looking to unwind positions if not already stopped out with the trailing. Do I think many of these steel companies are oversold? I guess this morning as well. They were oversold. There was a lot of oversold stuff, but a lot of them are still in. They're not in major breakout plays yet. Then I'll check on Bitcoin. Yeah, Bitcoin was strong today. What was that? And closed above the level. If you were watching intraday, the break, the pullback, and then you definitely got the close above the level. And you see here the confirmation close, and it was also the close almost eking out. This is on Coinbase, so this has more to run for the day. But you can see at this point, it's gonna probably close above these two high wicks. So not only the close above the key breakout level after the pullback, caught on the rotation zone. By the way, the double top, if you didn't already guess, that never triggered, was invalidated because it's now a triple. The next target, 22,402 to the upside. Stop raise target. I would not ignore this. If you're trading this from a long side, his stop raise is about 21,561. And that's pure. Then you can fine tune stuff with you could use then 21,817 as another stop raise, which isn't bad with these wick highs, and then the full target 22,402. So stop raise area, target. Or you could then raise it again here if you're trying for the bigger breakout play. But remember, you're in the weekly rotation zone, which is losing. So it's flattening out, so it's losing some, but this 21.4 is right in front of the weekly rotation zone. So I would not get greedy on a breakout play yet. Would I go long on coin? No, I would not. I would prefer, if you're going to play, I would do the pure play at this point with the cryptos. Coinbase is, as the technical term goes, Mr. Yuck right now. Still, even here, is broken below key support. Could not get it tried to pop above but closed below. And even if it can manage to get back into key support, there's limited upside at this point compared to the downside. I'd find better things to play with my money. Namely, if you're going to play something, related to cryptos, I'd be looking for that Bitcoin breakout play instead of trying to play a derivative stuff, because you got a lot of weakness still in the crypto market. So I'd have to go with a pure play. There's just not a great long-term pattern here in Coinbase. especially after disastrous earnings. You have a great weekend too. So there you go, Michael Anthony. All right, with that, I am wrapping it up for now. Everybody have a fantastic weekend. I will be back on Sunday. One more comment. The dollar was down and the metals was up, and even gold is why gold was up, but miners have been selling off most of the year. Yeah, you're welcome. And gold, yes, you're going to get pops. Gold was up pretty big off of, again, I covered this in depth. The key thing, if we get some follow through now next week, we've had pops before, and this is just a short term pop. Now, is this a little mini double? Well, you can map this out. Now, with today's price action, yes, it does not matter this hitch in here because this is still the same side. You have your targets. What would this target? It would just be targeting the October highs. Is it triggered yet? No, it's confirmed but not triggered. Interesting enough, I don't think you have a full gap fill. 170704, if I remember, close was 1709, and you still have a gap fill magnet, and your first target from the double 170860. So that's a fantastic first stop reduction level. So confirmed but not triggered based off that close. So that's something you can add for gold players. You can watch, you can do that one. There it is. And you can look to, I really love to play. Now, interesting enough, PHYS, which is, this is my favorite gold play. Separate, I'm not talking miners, I'm talking pure physical from playing it from a stock perspective. Let me clear this up just so you can see. This did confirm the double and trigger it. So this is the really nice play now. And I would, based off this gap right here, would use a tighter stop than traditional. So this is something, if you're looking to play going metals next week with gold, you have a triggered double bottom, so any pullback can be played, although if you get back to get a daily close below about 1280, would not want to hold this. Why? You got a gap magnet to the downside, and this would be a false breakout then. So this can be played. 1310. What's the gap to here? The gap is to 1312. So 1310 stop reduction just in front of the gap play. 1320, 1330. I'm going to leave it as that. There's a nice play. Somebody remind me about that on Sunday, and we can look more at that. We can look more at that. I wanted to check one thing going into Sunday so I can think about something. Where's my... The miners. Unfortunately, the double turned into a triple on the daily and the weekly. But we'll still be watching these miners going into next week. Just checking something out. Yeah, especially if this can pop above 2611. No, you can't use these targets, but it's then above the weekly rotation zone. And that might not be for next week or the week after, but that's where I'm going to be watching. I'll be covering that in the sector overview. That's a great, I'm just going to want another line on there so I can remember to elaborate a bit more on that. So this is something to watch for gold people, and because if the gold miners ETF breaks out, you can start looking for individual really good miner plays. If there's any good miner plays that have a strong pattern on them already, there might be some front run patterns. You can't see the letters for what? The what I'm on now or what I was on? My favorite play for gold is a Sprott Gold PHYS. PHYS. That's what you're looking at. Why? Because why do I like that versus GLD? Because they own the physical product. Also, from your weekly perspective on PHYS, look at this. This is fantastic. Does not make the probabilities go up. The probabilities are what they are, but close even above the weekly rotation zone. So that takes the lower probability away. Why it's now closed in the weekly rotation zone. And the other side of the rotation zone is right at the breakdown zone. So is this a long-term play? I'm going to hold gold to the moon. No, this is a short-term play. And by the way, from a silver perspective, PSLV, Sprott Physical Silver, is my preferred go-to for a pure silver play from a stock perspective. No, I'm not sponsored by Sprott. I just happen to like the way they structure their funds. So those are the two ones. Michael Anthony, Sprott Gold and Sprott Silver. And if you play on a great one, if you play it on the TSX, which is the Toronto Stock Exchange, which is now on in the US, but before it was only on here. My favorite uranium play from a stock still perspective is Sprott Uranium Miners. Besides the Global X, I like the Sprott stuff better than even this though. Hey, PMG, what a day in the markets, in the green, all thanks to you guys. Well, I'm glad you had a good day. Maybe it was all thanks to you that you've learned some really good tools and you've applied them well, and you've taken your knowledge and anything you've taken from this channel and made yourself a better trader. I hope that's what's happened. All right, now I'm wrapping it up. Talk to everyone later. Have a fantastic weekend.